Okay, good morning. Welcome to our post-Liberation Day live session in the markets here. Very, very interesting. Let's see what we get for market movement today after our about 1,000-point drop after President Trump pulled out his chart yesterday with all of the tariffs laid out on it. Market was doing pretty well actually yesterday. We had a really nice rally yesterday throughout the entire day. Market actually began to move up a little bit when the press conference started, and we all know how President Trump likes to talk. So it's a little bit more extended than I think it needed to be. But once we got down to the point where he actually told us what the tariffs were going to be, the market tanked just tanked. And we moved 1,000 points in minutes. Minutes. We gave back everything that we gained yesterday and then some. So let's see what we're going to get out of the market today. It's day one post-tariff announcement. It's going to be interesting. It's going to be interesting. So reading some articles today. Obviously, I knew that there were going to be all kinds of negativity around this, and now we're going into recession. So over the next couple of days, over the weekend, over next week, I can almost guarantee you we're going to start hearing again talks about recession, talks about inflation being going back up, and there's going to be all kinds of stuff. And you know what, that stuff might happen. It might, honestly. We may go into recession this year. Everybody agrees that or wants prices to come down. The problem is nobody actually understands how that works. And they just assume that if inflation comes down, prices come down, or we can just make companies decrease their prices. That's not how it works. Everything is supply and demand. As long as we keep buying products, those prices that they're at will stay. If tariffs get implemented on some of these products, the companies will try to push their increase in on their side onto the consumer. If consumers stop buying their products, they will reduce prices. The only time we have a massive consumer drawback, right, in spending is during recession. That's actually what causes the recession, right? So if everybody wants prices to come down from where they are now, well, guess what? That almost requires recession. And recessions aren't terrible. Yes, it sucks for a little while, for a year. It's. I'm not saying that it's a good thing to live through, but we've been through them. We always come out of them, and we always come out of them stronger. So when something is broken, like our government and our economy has been for quite some time, the longer you allow that thing to be broken, the more broken it becomes. And when you get to a point where you say, I really need to fix this now, I really should take a look at this now, the more broken it is, the harder and the more time it's going to take to fix it. That's anything, right? Here's New York session open here. So if we want things to be better, if we want to change the trajectory of our unsustainable increase in debt in this country, it's going to require some pain and some time and some radical changes in order for that to change. So I get that a lot of people out there are hurting. I'm one of them. That's why I'm doing what I'm doing here. because I can't stay doing what I'm doing. Um, it just doesn't pay enough because you're right, prices are ridiculously high on things. But that stuff's not going to change unless something drastic happens. That's the truth of it. That's reality. And so we need to either accept the fact that prices are going to be what they're going to be, and we just need to work on increasing wages, or we have to go into a recession in order for prices to come down, because that's the only way that they're going to actually decrease. We have to accept that we're going to go through some pain and it's going to take time. And we have to be okay with the fact that we'll come out of it and we'll be better off for it, hopefully. Sitting around and just complaining about all these things that everybody's doing, it doesn't even matter who it is. And I get that a lot of people don't like Trump. Even if it wasn't Trump, if it was somebody else that were doing the same things, the news would be doing the same shit. The reality is drastic change needs to happen, which will cause pain and it will take time to fix the problems that we have in this country. And across the world, it's not just this country. I mean, things need to change. Things need to change. We're in a new era, and things need to um, radically change in order to make things better for us and for our kids and their kids in the future. Okay, that's my little rant. Welcome back to the channel. Make sure you guys subscribe. I appreciate every single one of you. Don't forget to join the Discord. Link is in the description down below. Welcome back. Welcome back. Boy, yesterday was fun watching the announcement. Here we go. Like I said, market was doing really well actually yesterday. I was actually super surprised that during the New York session, we rallied, as you can see here. Rallied. Had a nice little pullback right before the announcement. And then even during the announcement, which was this, this little piece here, we began to rally again. And we were doing just fine until the chart came out of tariffs. And I don't know why. Yesterday, there were all kinds of rumors about how Trump isn't going to be as hard as everybody thinks were thinking that he was going to be with tariffs. And so I think that that rumor rallied the market yesterday. And then he came out, and basically what he's doing is he is charging reciprocal tariffs on, anybody that we do trade with at a rate of half of what they charge us. Okay, so technically that is less than what he was talking about in the first place, but the market still did not like that. So half of what other countries charge us in tariffs, we are going to charge them now with a minimum base tariff of 10%. So countries like China, we're going to be charging a 34% tariff on them. They charge almost a 70% tariff on us. The EU, we're charging a 20% tariff on them. They charge 40% on us. Okay. The UK, they charge us 10%. Our minimum base tariff now is 10%, so we charge them 10%. This all started midnight last night. India, 26%. Taiwan, 32%. Those are just a couple of the ones that I wrote down. We all knew that we were getting a 25% tariff on all automobiles built outside of the U.S. All right. We knew this was coming, and so now we have exactly what's going to happen. And instead of accepting the certainty that we have now there's all kinds of questions coming out today about, well, are these tariffs actually going to stick around? And I get it. We've twice now, President Trump has twice now stated and implemented tariffs on Mexico and Canada, and then paused them, implemented them again, and then paused them. So I get where that may be coming from, but maybe we should just assume that what he said is going to happen is going to happen, and if it doesn't, that's better, right? Nice surprise. I don't know. All right, quick little move up. Looks like we're getting rejected kind of in the same area that we did previous highs here. I'm expecting today to be a little bit of a volatile day. So if I do take any trades, they're going to be quick trades in and out, small profits. I'm not looking for any kind of extended runs or anything like that. Um, unless the market structure changes here. I might actually be getting some support here. Just give it a little bit more to play out here. Move some of my screens around. I'm trying to figure out what the best setup is for me here. And I used to have my 15-minute chart sitting down over here, and I moved it over here. And now I keep looking over here, and it's not there. I know. It's my problem. All right. All right. All right. All right. All right. Yeah, that was not a bad look there. It might have been a nice place to at least take a single contract. It's a little early still. Let the first 15 minutes play out here. Oh, we do have a bunch of data coming out today too. I almost forgot. Almost forgot. We got some important things coming out here. Um, we have U.S. S&P Services and Composite PMI final coming out in just 7 minutes. And then at 10 a.m., we have ISM Services PMI, Services Employment, Prices Paid, New Orders. All right. Um, yeah. So all important stuff there for today. Did we get our um so we got to keep that in mind too, that we have big hitters in 5 minutes and also in 15 minutes. Okay, the US S&P Services PMI final, and then we have ISM Services PMI at 10 a.m. So those are the big hitters for the market today. All right, so we are reaching previous day lows here, which if you look back here, we actually bounced off of in previous session, but then had a very strong push past that. So this may be a point of interest here for a possible reversal. Okay, or we can be pushing past here. If we push past here, then we can look for longs, but it looks like we might be getting the bounce off of it. Okay. Yeah, getting a pretty good rejection off of previous day lows. Uh, yeah, very strong rejection there. Looks like we do have some liquidity here in this area. You can see that with these tails here, these wicks. So even though we're getting rejected from previous day lows here, it doesn't mean that we won't grab enough liquidity here to actually move past it. Okay. We also had our normal initial and continued jobless claims. Continued jobless claims a little bit more than expected. Initial jobless claims less than expected. Actually, a pretty decent amount. We were expecting 225K. We got 219, so that's a good number. The continued jobless claims not so great, but this number here has been coming at or around expectations for a long time now, so that's not really anything surprising here. The initial jobless claims is good though, so we're not adding. Yes. So we're getting mixed. Yes, good morning. Hi, I know. We're getting mixed talks, I guess, about now the rate cuts for this year. We have some economists and specialists or whatever are saying they're not expecting any cuts at all now. And then you have others that are seeing an increase in cuts this year. We can actually take a look at what the expectations are in a little bit here. You need to get out? Give me 2 seconds. Okay, sorry about that. My cat didn't want to trade today, so we had to let her out of the room. Let's go take a look at the Fed rate monitor real quick. Do. All right, we're actually getting a little bounce off of these lows here. See if this was enough liquidity here to move up higher. Okay, yeah, so our percentage is actually decreasing a little bit. So right now for the month of May, which is our next FOMC meeting, we're sitting at a 73.6% chance of no cut. This is actually decreasing a little bit. Because we were sitting up in the 80s. Yeah, actually, last week we're at 88%. Yesterday we were at 81%. Today we're sitting at 73%. Let's take a look at June, which would be the one afterwards, and we're actually now sitting at 57.6%. 57.6% chance of a 25 basis point cut. That's where we're sitting right now for June. And May is slowly decreasing. Decreasing for a no cut. 25 basis point cut is creeping up. We are actually, so previous week, last week, we were sitting at 11.3% of a 25 basis point cut. Yesterday, we were at 18.6%. Today we're at 26.4%. Obviously, these numbers can change day by day drastically, but you know, if the economy starts to slow down enough, and it does look like we may fall into a recession, they will decrease rates. Maybe that's the entire plan. Let's step back and look at the grand scheme here. Sometimes you have to force things to happen. And keep in mind too, the Fed can cut interest rates overnight. They've done it in the past, over a weekend actually, not even during a session, an emergency session over a weekend, and they cut interest rates drastically. So they can, if they see something happening, and they'll wait until the very last second, because that's what they do. Uh, they will cut interest rates drastically, but usually that happens when it's already too late, and that's fine. Maybe we need a recession. All right, a little bit of consolidation here. Looks like we may continue to move back down to lows of today. I don't want to get into anything until after the ISM services PMI comes out, honestly. Okay, so S&P Services PMI final actually came out slightly better than expected. We're looking for 54.2. We got 54.4. This is still showing expansion, growth. Yeah, this looks pretty messy right here. The S&P Composite PMI final came in at expectation, which is the same as the previous month too. So this isn't moving at all. Let's take a look at the chart for services PMI here. Cost of inflation up to 18-month high. Yeah, so it says here in the report, the global U.S. Services PMI Business Activity Index improved noticeably in March, having slumped to a 15-month low during February. After accounting for seasonal factors, the index rose to 54.4 from 51, and the highest reading of 2025 so far. So, and again, like I said, this is still showing growth. So, by remaining above the crucial 50, no change mark in March, the index has signaled continuous monthly growth since February. So, I mean, that's so far, right? Things can change, but so far, everything looks okay. Now, we'll have to wait to see, a couple months down the road, how these tariffs and stuff will impact all of these numbers, right? This stuff obviously doesn't include um, the reciprocal tariffs. These numbers may include some of the tariffs that went into effect for Mexico and Canada. May. Okay. Yes, yes, yes. All right. Hey, this one is a 15. Okay. All right. So a couple more minutes here. Fix that later, I guess. All right. Yeah, we're just getting some consolidation here now, looking for those numbers, I think, which will be out in what, 2.5 minutes, I think. Yes. If we take a look at, let me see if you guys can see this here, actually. How's that look? Nope. There we go. Okay. Well, you guys can see the 15 over here, right? Yep. You can see how we're starting to form a range of just sideways trading here today. And this may change depending on the numbers that we get in a couple of minutes, but I don't know that those numbers are going to have that much of an effect um, to change the trajectory here. I mean, we may just be kind of trading sideways here, soaking up what we got yesterday and figuring things out. The rest of this week kind of might be a little moot, to be honest with you, with the market. Tomorrow, we got a lot of big unemployment numbers coming out also. So, all right. So I think we are getting numbers here. Let's hop over. Yeah, 30 seconds. So we get our ISM services PMI. And again, here we're looking for expansion still. Forecast is 52.9. Market's already starting to get a little choppy based on this number here. So we might actually get a decent move with this number. Oh, see, here we go. What are we going to get? Come on, give me those numbers. It's interesting. I still do not have them yet. Looking. Again, we're expecting a 52.9. Oof, okay. Less than expected at 50.8. 50.8. So that's close to no growth, right? 50 is break even, essentially. Anything above 50 is growth. Anything below 50 is um, uh, less than, is not growth. It's contractuary. That's what I was looking for. Thank you. Wake up. Let's go. Um, okay, so ISM services employment, huge miss to the downside. We were expecting 53. We got 46.2. Services prices paid, a little bit less than expected. We were looking for 63.1. We got 60.9. And then services, ISM services new orders also missed to the downside, expecting 51.9. We got 50.4. So also almost no growth there as well. Those numbers are not great, especially after the tariff talk yesterday. That's not so good. That's not so good. Okay. So those are the numbers for today. Those are the big hitters today. Uh, Tomorrow we have a bunch of, so we have our unemployment rate, we have non-farm payrolls, we have average earnings, private payrolls. So a whole bunch of unemployment and payroll data coming out tomorrow morning. And all this is at 8:30 before market open. I love it when they come out before market open. Give the market some time to, figure out where it wants to go before the New York session opens. But I would expect that the market, this doesn't add, I don't think anyway, in my opinion, this doesn't add confidence. Okay, where we're now starting to come down into break even area or contraction area. If we dip below 50, now we're looking at contraction. We're not there yet, but we got pretty close today. And no growth is concerning too, right? That kind of aligns with, the Fed came out and said that their outlook is decreased growth over the year. So this kind of all aligns. Now all the pieces might be starting to fit together. Some of the puzzles starting to look like a picture. Yeah. So what I'm going to do here is I'm going to look for price to come back down to today's lows. We're either going to get a bounce here or we're going to continue lower. But this is where I'm going to look to take a trade essentially. All right. Might actually be getting a little liquidity here. Not a lot of volume today. Okay. Yeah, I think we're definitely coming back to, let's see, where did we open here? Oh, so we've already pushed past New York session open. Actually, this candle here is what's either going to hold above or send us below. Okay. So we're starting to get some consolidation here right around New York session open. Here we go. So we're pushing past our liquidity here now. You can see we were getting some support in this area here. Hmm. Looking pretty bearish here. I still think the safest play here is to wait for price to reach lows of the day here, and then we can watch to see if we're either going to get a bounce here or if we're going to push past. If we push past, then we can look for possible short. If we hold here, then this will be a very good place to take a long. Again, anything that I take today is going to be a quick trade. At least that's going to be the hopes. I don't want to stay in anything too long. Too much volatility, I think. Safe bet would be to place a trade, take your profits as quick as you can. It's definitely setting up to be a range trading day, as you can see here. Got some liquidity here. So the question is do we sweep this liquidity? Yeah, we might have hit our turning point here, actually. This coincides with, liquidity found here. I could have found some liquidity right here. And now we're trying to push back up. Although we're getting caught up within this liquidity here also. So let's see. Decent downtrend here. Actually looks like we got a channel going here. Majority of the platform is short, right around this here. Be interested to see if some of these numbers start to change.
Order
Let's take a
filled.
little scalp here. Let's try it.
Order filled.
I don't know if that closed green or not, but we did. $7. We're getting a lot of liquidity here. We're having a hard time pushing past this level here. So, yeah, I didn't like what I was seeing here. So we just got out of it. And hey, we got out of it green. Break even, we'll say, right? Okay. Gave it a go. Didn't work. Got out before we got red. Yeah. Again, this is one of those markets today anyway, where you get in and you get out. Just, you know, small positions, take what you can get today, you know? Nothing crazy. Yeah. So, I mean, here's the thing in hindsight, right? Because we're range trading here, you're getting some serious volatility and choppiness here. The best way to trade this is not what I just did. You wait for the range. Okay, today's low is here. Today, previous day high is here. We did push past this a little bit, but we haven't been able to push past it in New York session. Okay, so this still holds pretty good. Um, if we take a look again at the 15 minute, all right, you can see the range between today's high and today's low, which was made pretty much when the market opened last night. So here's a range that we're trading in. You know, the safest way to play this would be wait for price to reach one of the ranges, one of the ends of the range, and you either take the bounce off of it or you wait for it to move through it, and then look for, extensions to one side or the other. But that's where the majority of your liquidity is going to be, is down in these areas here. You're going to get some liquidity, obviously, uh, here, which is actually previous day low. But you can see where we've been holding below that, and then New York session opened, came up, tapped it, and got rejected off of that. So, um, but now we've come back down to the lower end of the range, you know. So, but you can just see from here, this is 110% sideways trading, which again is, expected. Let the market consume, digest what we just got and kind of figure things out. And we might be range locked here for today, maybe tomorrow. The 4-hour chart doesn't look great as far as extension to the downside. We might have some more room to the downside here. And let's actually pop over to the day chart to see if we do go past today's lows here. Our next stop is probably around the 18.5 ish, back down to these lows here. Find some liquidity down here. We might get a bounce there, but we are looking like some extension to the downside, possibly, but we might get some consolidation first. So if we measure highs to where we are here in the NASDAQ, we're down 16.9% from all-time highs. So I believe that is correction territory. Oops, what did I do? Yeah, so we're in correction territory, which is anything more than 10% but less than 20%. And then I believe 20% is bear market. That's when you enter bear market. We got a decent amount of liquidity up here. You can see how we're not closing any higher than this price here, but we're wicking into it. So if we get a close up in this area, it might be a good indication we might go a little higher. But as of right now, the liquidity here is pushing price back down each time. Trump's tariffs amount to worse than worst case scenario as investors brace for stock market beatdown. I I have a real problem with our media because I feel like worst case scenario would have been 100% tariff, reciprocal tariff. I feel like that would have been worst case scenario. And so worse than worst case scenario would have been more than 100% reciprocal tariffs. We got 50% reciprocal tariffs, and we're labeling this worse than worst case scenario. Come on. Come on. And I get it. You got to get the clicks. But, you know, Okay, here's an article. Trump's tariffs could cause many countries to enter into a recession, says economist. Not if they lower their tariffs on us. If they lower theirs, we lower ours. It's that simple. Nobody has to go into recession. Let's lower all of the tariffs across the world. Hello, free trade. Says article here says this is a quote. This is a game changer not only for U.S. economy but for the global economy. Many countries will likely end up in a recession, said Olu Sonolo, head of U.S. economic research at Fitch Ratings. You can throw most forecasts out the door if this tariff rate stays on for an extended period of time, he added in a note to clients late Wednesday. Late Wednesday, like we just came. How did you calculate all that? Come on. People just jump to the whole point is to get all the other countries to reduce their tariffs on us. Come on. And if they're going to go into recession off of it, reduce the tariffs. In general terms, Canada and Mexico have gotten off lightly, while countries in Asia, particularly China and Vietnam, have been hit hardest. The European Union and Japan sit somewhere in the middle, said Neil Sharing, Group Chief Economist at Capital Economics. You know, the majority of these people who are supposed to be the specialists are always wrong. The economists are like weathermen. They're almost never right, you know? They're almost never right with their predictions, yet they get paid all kinds of money to put out these predictions. What a job. I should have became an economist. Blah, blah, blah. I can't even say the word. Maybe if you can't say, you can't do the job. How crazy is that, though? You know, come on. It hasn't even been 24 hours, and we're just throwing the fear out there to the entire world. How about you let the leaders of all these countries digest, pick up the phone, make some deals, which is the whole point of all of this, and then you can come out with your fear mongering baloney. Mhm. Okay, here's something true here. Trump wants the tariffs to fund income tax cuts and incentivize manufacturing reshoring. But the measures mean, quote, a painful transition period ahead. No kidding. Any kind of transition, any kind of change is painful, but it doesn't mean it's not good. Doesn't mean it's not good. You bring manufacturing back to this country, you create hundreds of thousands of jobs, millions, right? If we make a little extra money in tariffs, then yeah, we can take some load off of the consumer in the US, right? What is wrong with that? Yeah. He estimates that the tariffs will add about $1,350 of extra annual cost for every American, with price levels rising by around 2%. Okay, that's an estimate, and that's assuming that the U.S. consumer is going to pay the increase in prices. That's assuming that. Right now, the US consumer is tapped out. They're not going to pay extra money for products coming in from outside of this country. They're going to go for the cheaper products. And they're going to go for the products where companies are coming into this country and building their factories here and then selling their products. Okay, so this is all assumption based off of, oh yeah, we're just going to sit down and take it, right? And this is also assuming that no country that does trade with us is going to sit down and negotiate tariff costs. Because this is assuming that everything that was posted yesterday is going to stay exactly the same. This is assuming that no country is going to come to the table and say, okay, we'll reduce our tariffs by 20, 30, 40%, which in turn means the US will reduce the tariffs on them by 20, 30%, whatever, right? This is an assumption that is so far outside of there are so many possibilities here. How could you just come out with one assumption? If you're going to come out with some assumptions, how about you say, well, if this happens, then it'll cost this. If this happens, then it'll cost this. If this happens, then you'll save this. How about tell the whole story, the whole thing? Because you have no idea that within less than 24 hours of the announcement, that's what's going to happen. Come on. Mm, I guess what just gets me is that nobody wants to report on all of the possibilities. They just report worst case scenario, you know? And even if you don't want to go through everything, why don't you say in your reports, well, here's worst case scenario, here's base case, and here's best, right? I mean, is that difficult? You know? No, we just want to ensue fear. I mean, hey, whatever. Drop your fear. People will stop spending money. We'll go into recession. Prices will drop. Countries will come to the table, will negotiate better trade across the country, and at the end of 2025, or in the beginning of 2026, we'll come out of our recession, and the whole world will expand. There you go. Best case. There you have it. All right, so we're getting close here. Well, yeah, we're getting close here. You can see how we could not push past the liquidity that is up here in this area. So we had our consolidation, basically all of this. We had a little manipulation play and we came right back down. I wasn't paying much attention, but this might have been a good place to um, enter. But that's okay. Nice little run there. That's not too bad. A little bit more consolidation, continued push to the downside. And now we're sitting basically on lows of the day. Not quite there from previous session, but we'll say early session for the New York time frame. We're at the lows here. Pre-market New York session, that's these lows here. So we're just about touching there. We could either bounce here or push through. I'm inclined to say that we're going to continue to the downside, to be honest with you. If we push outside of this range here, I think we got some more downside. So we've reached our key level. Now we need to see how price reacts here. Okay, so just be careful for a liquidity grab here. All right, and we're continuing to make new lows of the day here. Just be careful. It's not very strong, but volume is building with these three candles to the downside here. So we might get a flush here. This retest probably would have been the place to get in. So I would love to see a retest. You got volume growing here on the way down, though. So we might not get that retest. Yeah, so let's wait for a retest here uh, and see what price does back at the lows of the day, previous lows of the day. So we did get some volume growth on the way down here, but this did move pretty slowly. So let's see if we can get a retest of the previous lows of the day before we continue to head down. And that doesn't mean that we will. This could just be taking up some liquidity here, and then we might end up back inside of our range here. But let's see. So the plan here is for a retest. Might not get a retest here. We might just get a flush here. So we have our final candle here within our 15-minute. We might just push lower, honestly. We might keep pushing here. Yeah, we're going to end up closing pretty strong on this 15, you can see here. All right, push past lows of the day here. Very strong push. I still would love to see a retest. Right? So we kind of made a double bottom here. So let's get this retest. I believe we'll get it now. And then we'll see what happens from here. We're either going to push past here or we'll get a test and get rejected again. Let's see. Let's see. So I got a little volume pump on this single candle here. Still holding. You can see this like really nice trend line here forming. Right? And that's still holding. So I don't know if we're going to get a retest here. I'd really like to get a retest. I don't think we're going to get it. I think we're going to get a dump. Yeah, I think we're going to get our continuation to the downside. It's okay. I really wanted to see a retest of the previous lows of the day. I don't know, I don't want to get stuck somewhere within here. We definitely don't know, if we are going to push past here. So I'm going to stay patient. I want to see a retest of previous lows of the day. And if this maintains here, then we can look to go shorty short. But we're just getting some consolidation here at the bottom. Pretty, pretty decent rejections here. But ultimately, if you take a look at what we see here, really nice trend line forming here that we are respecting. So we wait. There she blows right to the downside. How low can you go? Yep. Even on the 15, the volume is building as we move down. It's just this pretty slow, steady movement, continuation to the downside until I just spoke. And now we're getting. Do, 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 do. Well, we are definitely getting closer to bear market territory here. Let's take another measurement. All-time highs, which is here. We have now reached 17.3%. We're close. We hit 20%. We go past 20%. We've entered bear market territory. Where does that land us actually? Let's take a peek. Right there. Right there. So I'll tell you what, that's our next target right there. This low right here, these lows right here. Boom, what is that? 18.1. 18.1. Oh, no, I can't see. It's at 18. Get rid of this. 18, just about 18. We drop below 18,000. We are in bear market territory. Okay, that's your level right there. Yep. So this is our target. Okay. Especially if we keep pushing lower today, we're definitely looking for. It'd be nice to get a bounce at 18.5, but ultimately our next, yeah, this is the stronger one here, right? Resistance here, we push past, we have support, support, support. We push past that support at 18,000. Bear market territory. I'm going to plot that out right here so we can have it, see it. Put it right there. Yeah, 18.1. And we'll put it there. Yeah. That's it. Can we label that? Let's label it. Label. Okay. So now we got that plotted. We know. There we go. Hey, here's the retest I was looking for. Are we going to push or are we going to reject? What I don't like is this structure looks reversal. So, hmm. Well, maybe. It's kind of hard to say. Hmm. Okay. Yeah, that was your entry for a long position right there. I think. Not that I would take that. We're still below here. We're still holding below previous lows of the day. We're trying. I don't know. Just waiting for this to play out here. Came up, we tested, we pushed past a little bit, but we came right back down. There we go. Or not. Well, So this is a nice reversal here. I'm just, the day is very bearish, obviously. The sentiment is very bearish. Everything is very bearish. So I don't think I want to take any long positions. I'd rather let this come to wherever it's going to come up to and take the downside. Still undecided here. Still undecided. Oof. All right, maybe we are going to go back to the other end of the range. I'm still not taking any long positions today. There's just way too much downside. I'm going to stick with shorts. No, right now, 50-50 in which way we go. 50-50. And we're running out of time here. So once we get to like 11:50-ish, 11:45, I'm not really taking many trades after that unless we come back for the afternoon session, but Okay. Yeah, we might be pushing back up to the opposite side of the range here, or to back up to these levels here where we had quite a bit of liquidity here. So either way, I think that's going to be it for me today. I'm going to watch on the sideline here, set some alerts, but I still think we have some more downside or sideways trading. I'm not going to take any long positions just because the sentiment this market here could flip on a dime and continue right down to the bottom here. So uh, if I do take anything, it'll be short. Um, but based off of what I'm seeing right now, we might have a little bit of upside left here. Um, so I'm gonna set some alerts and go from there. So anyway, thank you guys for watching. Appreciate every single one of you. If you haven't subscribed to the channel yet, I'd ask a favor. Please subscribe to the channel. It's free. Helps me out. That way I can continue to help you guys out and bring content to you guys every single day. I go live every morning that the market is open, trading in my challenge account through Top Step. And yeah, don't forget to join the free Discord. The link is in the description for that as well. And I'll see you guys all tomorrow morning. Stay safe, stay green.